Hi friends, today I am going to review Himadri Speciality Chemical Ltd. This is a specialty chemical firm based upon carbon and its derivatives. So, as an introduction, Himadri Speciality Chemical was founded in 1987 by Chaudhary family. Three of the brothers actually run the firm, and it is headquartered at Kolkata, India. Globally, it is among few highly integrated carbon companies. So they started off manufacturing as coal tar pitch. Gradually, they expanded and integrated many other carbon-based products into those portfolio. So over the years, they had a lot of value-added products, and it's one of the world's most extensive value chains in carbon segment. So they have around 7 manufacturing facilities in India and one of the state-of-art manufacturing unit in China. The company's R&D facilities are recognized by Government of India, and today it is a leading specialty conglomerate, and it has a established brand following in terms of specialty chemicals business. So let's see what are its products. They started off previously. I told that their initial product was coal tar pitch, and from coal tar pitch they over the years they have gradually diversified and expanded into many value added products or derivatives from coal tar. So let's see what is coal tar. Coal tar pitch is a critical material used as a binder for manufacturing aluminum anode and graphite electrode. So aluminum anode and graphite electrode. So from the term itself, you can understand that the two main industry that Himadri serves is aluminum industry and graphite industry. So these actually helps in increasing strength, density, and electrical conduence, and more durable, superior grades of electrodes, which is used for aluminum and graphite industry. So when you see where it is used, aluminum and graphite electrode. Then from this coal tar pitch, they have diversified into carbon black. So currently around half of the raw material needed to manufacture carbon black is procured internally through coal tar pitch distillation. So it's an essential material used in industries like tire or other rubber products. So it enables a long-term performance of rubber in tires, hoses, weather stripping, and other key end uses. Then there is advanced carbon material. Advanced carbon material is also processed through the distillation of coal tar pitch, and it is one of the future looking product from Himadri, because it is an advanced quality anode material used for lithium ion battery, which is used in electric vehicles, smartphones, and other energy storage devices. So where it is used, electronics and electrical vehicle. I forgot to tell you about where mostly carbon black is used. It is used in tire and rubber industry. Then there is specialty carbon black. After they have started manufacturing carbon black, they have diversified, and they have developed specialty carbon black for a lot of other industries like packaging, agriculture, infrastructure, textiles, coating, and inks. So it's a highly performing ingredient with a range of plastic applications like food packaging, synthetic fiber, lot of application. I will go in detail about it. Then there is sulfonated naphthalene formaldehyde. It's a derivative of, it is also produced from coal tar, and it is a derivative of naphthalene, and it has application in concrete and mainly in construction and infrastructure industry. Then there is naphthalene. You know, naphthalene balls you would be using for against moths. So this is an aromatic hydrocarbon found in coal tar, and this is used in dyes, intermediates, and mothballs application. So let's see what are the products of Himadri is used in daily lives. Inks for newspaper and printing material, tires, automobiles, fiber, lithium ion batteries, aluminum products, then paints, coatings, wires and cables, plastics, textiles, and industry. A lot of other industries like infrastructure, automobile, defense, construction, anti-corrosive materials, steel, aluminum. So let's see the milestones of Himadri Speciality. So in 1990 they commissioned coal tar distillation in Lilua, Horab, West Bengal. 93 commissioned distillation plant in Aura and manufacturing unit in Visakhapatnam. 2000 they merged Himadri Ispat Limited coal tar distillation facility with the company. 2005 they commissioned coal tar distillation in Lula, Hora, West Bengal. 2006 they commissioned byproduct refining plant in Mahistri, Hooghly. 2007 they established pitch plant, Cobra. 2008 they started production of advanced carbon materials used for electric vehicles. 2009 they acquired SNF plant at Vapi and commissioned carbon black plant and power plant at Mahis, Turkey. 2010 they completed capacity addition at coal tar pitch plant at Mahis, Turkey, and capacity addition at SNF Vapi plant. 2011 they recognized as an R&D center from Government of India, and they completed capacity addition for carbon black at Mahistri, commission production of SNF at Mahistri. They established 100% export oriented unit at Falta SES for advanced carbon, established corporate and teach coal tar pitch at China. Then in 2012 they completed brownfield expansion of power plant, 12 megawatts to 20 megawatt. Initiated brownfield project to enhance coal tar distillation capacity by 60%. Then 2014 they commenced expansion of coal tar distillation capacity at Mahisi. 2015 they set up pitch melting plant at Sambalpur, Odisha. So this is all about milestones of Himadri. Let's see the products about Himadri in detail. So their first product, which is coal tar pitch, from every most of other byproducts or value added products are manufactured. So it is the largest coal tar pitch manufacturer in India with over 70% market share, and 45% of the company's revenue comes from coal tar pitch, around 500,000 megatons per annum. So they have developed a special grade of coal tar pitch to DRDO. They have 4 locations in India and China. It is a binder. Previously I told about why it is used. It's act as a binder and impregnating material in graphite electrode. And Himadri has basically tie-ups with all major steel and Indian and global steel manufacturers, which actually provides raw materials to Himadri. And for producing 1000 kg of aluminium, industry needs around 100 kg of coal tar pitch. And for 1000 kg of graphite, they need around 440 kilogram of coal tar pitch. So for graphite industry, Himadri has been supplying a lot of coal tar pitch, and even for aluminum industry too. Then carbon black. So they have actually advanced from coal tar pitch manufactured to carbon black manufacture. They are the third largest producer of carbon black in India. Around 41% of revenue comes from carbon black, and around 120,000 megatons per annum is their production capacity. So it is a key raw material in tire industry. They have it ensures rubber compound with a minimum grit and top ranging modulus. They are also this carbon black is also widely used in many other products like rubber based products like belt, hoses, gaskets, diaphragms, brushing, air springs, etc. Then there is after they have started developing carbon black and started manufacturing in a wide range, they progressed forward with manufacturing specialty carbon black. This is a superior consistent and this is fed from the raw material from the in-house distillation unit. And these specialty carbon blacks are high performance material used in niche applications like plastics, paint, ink for printing industry, fiber and coating, and moldings, pipes, and semi-conductive cable components. So a lot of application in industry ways. Then there is advanced carbon materials. This is one of the area Himadri has a potential to grow in future, because they develop natural and synthetic varieties of anode material for lithium-ion batteries. So, as everybody know, what is the scope for lithium-ion batteries in future-looking industry? So, they are the only producer of advanced carbon materials in India. Then there is naphthalene derivatives. This naphthalene derivatives also comes from their distillation process. So they use state-of-art technology in multi-stage refining to produce chemically treated naphthalene oil, and these are used in products of dye intermediates, and Himadri is the largest player in the market. From naphthalene, they can produce sulfonated naphthalene formaldehyde. So it produces at Mahiskri in West Bengal and Wabi in Gujarat plants. So they are the largest SNF manufacturer in India too. So when you think what is SNF is used, they are used in concrete, agro, rubber, and gypsum manufacturing. This is an admixture in concrete infrastructure industries. This is used in agrochemical as dispersant, and SNF based polymer is used for dispersion, water removal, and drying application in gypsum industries. It is exported to Asia Pacific region, especially Sri Lanka, Bangladesh, and Middle East. Then there is polycarboxylated ether. So this is also byproduct. So they have the largest PCE manufacturing facility in India, and it's also at Mahisri and Wabi plants. So This is also used in concrete infrastructure application. They actually impart required properties for improving plasticity of the concrete in order to provide required strength of the concrete. Then there is corrosion protection products manufactured by Himadri using their best quality high temperature carbonization coal tar, which is an optimum reactivity to both acid and alkali attack. So it is suitable for all climatic conditions, including severe salinity of seawater. Then there is specialty oils. These are developed as these can be used in several industries. These are byproducts of distillation process, and this is used to produce wood preservative oils, wash oils, and fuel oils, etc. So even the company uses this oil as a fuel for their furnaces and so on. So it's an added advantage for them. Then there is power. This can be considered as a product of them, but it's it giving an integration for the company, which is backward integration. So Himadri generates clean and green power, which is marketed to state electric grid, and it is consumed back in house. So they use low caloric value waste gas coming from coal carbon black process, which is used in boilers. So these boilers are designed to generate high pressure and high temperature steam, which in turn drives the turbo generators to generate power, so that this actually results in minimal energy wastage, and this energy is actually consumed back by the company, which actually says much about the forward and backward integration of the company. Company actually produces almost all the materials from coal tar pitch through the distillation process, and they even produces power, which is also kind of acting like a integration process. Let's see some interesting facts about Himadri Specialty Limited. So they have transformed from low value products manufactured to high value products manufactured over the years, and 92% of the revenue comes from India, 8% from exports, and they have recorded a sale of 320,000 megatons per annum of carbon materials in financial year 2020. If you look at the client base, their main client base, the major client base include names like Vedanta, Hindalco, Balco, Nalco, Graphite India, MRF, Apollo Tires, and a lot of tire companies and chemical companies. So then next thing is about the forward and backward integration of the company. I have already said about the backward and forward integration of the company. And R. Shyam Sundar Chaudhary, who had been one of the chairman of the company, founder, one of the founders from the three brothers. So he has been called another 5 years as a whole-time director for the company because of his vast experience, and he is expected to draw 2 crores salary per year. And previously also I said 3 brothers are promoters. And one thing good about the company is, even though coal tar pitch, carbon black, everything creates a lot of pollution, company is at a better stage to handle all the pollution factors, and they have zero discharge world class facilities in India and China. And company also innovates very well in to develop new products and technology in carbon. And one thing about Himadri and the specialty chemicals related to carbon or another these based industries is there is a huge high capital entry barriers which actually secures the company from excess competition. Let's see some of the shareholding pattern. There is no share pledge, but if you see, most of the shareholding is controlled by the promoters, Modern High Rise Private Limited. So one thing I find a little bit fishy is we are not able to understand who is the real exact promoter. Even the three brothers are founders and they're running the company for so many years. And this Vijay Kumar Chaudhary, Shyam Sundar Chaudhary, Banki Lal Chaudhary. So their son and the family runs it. So their subsidiary, they are not subsidiary. Their other companies actually have the stake in Himadri Speciality. So if you see Modern High Rise Private Limited, they have they hold around 43.58 out of 45.43. So almost 98% of shareholding. And if you see, foreign institutional investors over the years actually reduced their stake to 0.64 from 2.36, which is not at all good for the companies. That actually gives not a good sign. And if you see, domestic institutional investors also reduce their stake, but in recent months the domestic institutional investors actually increased their stake in Himadri. Might be the company has been performing much better. And look at the public shareholding, it's around 53.92%. So the public is the main shareholder for the company. So public expects that the company will be company is not truly performing to the conditions right now. So it is expected to perform much better in the future. Let's see financial evaluation to discuss much about it. So the market cap base, it is a small cap company with 2,279 crores. Current market price at 54.4 rupees when it has a book value of 42.8, which means that when you compare the book value itself, company is not at all overvalued, only slightly overvalued. It went up to 64 rupees and went as low as 37 rupees. So it means that company is not going below 37, which is good. But look at the PE value. Based upon the PE value, it is has a PE more PE value when you compare with the industry PE of 29.9. It has a PE value of 48. When you compare with the PE value, the share price is little bit overvalued. And ROC is not that good at 4.6%. ROE also not that good at 2.69%. Face value is at 1 rupee, which means that there is no stock split in future. In the current running year, they had sales of 1,679 crores with a operating margin of 7.8%, which is not that high. They made a profit of 47.5 crores, which means that company is not that performing to the levels that company was able to perform in the recent times. But company is getting better over quarters. So in last quarter, they made a sales of 566 crores with a PAT of 22.8 crores. In 3 years, they have a negative sales growth of minus 5.9%, which is not at all good. And profit growth of minus 42.3%, which is also not at all good. So company base, there is something issue with the management that actually tells you that even the company is very well placed to go after sales and the products, it is a well diversified and well integrated company. Still the sales growth and profit growth is not up to the mark. And they have a debt of 678 crores. If you see, actually the debt is more when you compare with the undrawn credit facilities, but I think from the drawn facilities it comes around 678 crores, and return on assets is also very less. Let's see the financial return. See, over years they had the the revenue has been going up, and from 376 in 2020 it reached to a revenue of 2377, which is very high actually. So when you really see the growth of revenue, which means that company has been performing very well in terms of sustained and high growth. So there is no point when I'm seeing revenue growth. Over the years, company has been growing in terms of revenue and profit. See, 81 crores, 243 crores and 311 crores. So in 2021, 81 crores. 2021, right now they had a slower growth, but still it's when you compare with past years, it has been it's not bad actually. The fact is they have a huge capacity and they are not utilizing the capacity to enough. Full they are not running to the enough capacity that they have. Let's see profit and loss statement. See the operating margin, actually they have reduced so much from 2010, 39% to 23, 22, 16% in 2020 and 8% in 2021. Mainly it happens because the profit, the operational margin has been reduced because the graphite industry has been slowed down. The aluminum industry has been slowed down, and there are numerous factors due to COVID pandemic actually affected the company. That's why the operational margins, everything is down. So let's see that the company will turn around with in future when the COVID pandemic actually goes away. And with respect to depreciation, it's okay. Interest cost, if you look at the interest cost, it was high in 2014 and from 2016 onwards interest costs are actually getting down, and that means that the company has reduced debt and company's interest coverage is well off. And see the net profit, even though they had negative profits in 2014 to 2016, from 2018 onwards they have a huge profits from 247 crores, 324 crores. So let's see that the company is not that performing to its optimal level right now, but we expect that it will perform in future. CAGR sales 10 years 14% growth, good, and 5 years 6%, not that good, but 3 years 11% growth, which is good because company is actually 11% is still good. But look at the TTM sales growth and look at the profit growth in compounded profit growth TTM -27 and -50. That means that the company is actually having problems in the running months. Still, if you see in 5 years, they had a compounded profit growth of 53% and 3 years 22%, which means that company is actually advancing from low value products to high value products, which is very good for investors to consider this stock. And yearly EBITDA margins, actually EBITDA margin has been coming down, even though it has reached to better margins at 2018-2019. From 2020 onwards, it came down because of obviously COVID factors. So let's see ROCE, ROE and ROA of Himadri. So 2014 and 2015, 2016 was very bad years for company. From there onwards, company has actually performed, but from 2020 onwards, it has come down. But still, we can consider that it was an issue due to COVID pandemic. So company has been good at using both shareholders money and the debt money in our when case of ROC, shareholders equity in ROE, and best in using company's assets related to ROA. So let's see some about the risk factors when you invest into Himadri Speciality Chemicals. So the company has a rated debt amount of 176,768 crores, which is a long-term bank facility, out of which I think around 678 crores might have been used by them, and they have a short-term commercial paper worth 300 crores. They have a credit rating of CARE AA negative. The outlook has actually revised to negative from the positive rating because of muted financial performance in the near term. And both for the short term, they have CARE AA negative, CARE A1 plus. Both outlook is negative. The outlook is negative mainly due to recent muted financial performance. But look at the long-term debt to equity ratio. So company has actually reduced their debt enormously. They had too much of debt in 2014, 2015, 2013 years. 0.668, 0.74. Right now it stands around only 0.01, which means that company is which actually says that company is virtually debt free, but we have seen that the company is debt. And look at the interest coverage ratio. So over the years, in company has a better interest coverage ratio. It has a lower interest coverage ratio 2014, 15, 16. Then onwards, company started managing its financials very well. So it has a better interest coverage ratio. Let's see some of the business risk as such company will. So company's main cost includes raw materials, which actually tied even with the oil industry as well, because because they have, especially carbon black, the raw materials for the half of the material needed for producing carbon black actually comes from oil industry. And they also wants raw material for coal tar pitch, which also related to they can go up and down due to cyclic nature of the industry. So how the company mitigates it, they prices the product on cost plus margin formula. Then there is raw material price fluctuation. um, so and there is another foreign exchange issues, like more because the raw materials like for the carbon black actually comes from oil related industry. So company is a net importer, so company has a lot of foreign exchange fluctuation business risk. So the company actually hedges it foreign exchange in order to mitigate this risk. Then right now they have a lesser capacity utilization due to slowdown in graphite industry and moderation in their own industry to business too. So it expects that the business would be improving in quarters to come. Then another thing is they have new projects which has to be executed and kept running for advanced carbon material and specialty carbon black, which are on hold or running in less capacity. So that's a threat, business risk for the company because of current business environment. So we are expecting that in future company will be able to run it in full capacity. And there is a threat from carbon black imports from China. Despite the anti-dumping duties given on the carbon black import, still it is imported in large quantity. Let's see the valuation factors for Himadri Specialty Chemicals. So look at the book value per share from 2011 onwards. Slowly the book value has been improving, but in 2010 it had a book value of 191.4 rupees per share. But I think after 2011 the stock might has been split, so the book value has reduced to 22 rupees per share. And look at the price to book value. So price to book value in 2018 and 2019 it was 4.3 and 3. Right now it has price to book value near to 1.6 only. And in financial year 2020 it has a book value of 0.7, which means that currently the share is undervalued. Let's see some of the strength of Himadri and strength and weakness. So it is an established player in coal tar pitch, number one manufacturer, and carbon black manufacturer, third largest manufacturer. And there is a strategic location of plants which actually helps the company, which means that it is very near to the raw materials. And they are the only manufacturer of advanced carbon materials. That means that they have a future of potential to get big in that field, and they have a diversified and integrated manufacturing capabilities. Then other strength include mutual funds increase their stake, improving net cash flows, growth in net profit quarter-on-quarter, company with low debt, increasing revenue past 3 quarters, book value improving past 3 years, zero promoter pledge. And related to weakness, annual profit decline in last 2 years because of COVID pandemic issues mainly, declining profit year on year, and degrowth in revenue and profit, and promoters decreasing their shareholding. So there is there is also weakness because of the opaqueness of the management. That actually is something that I feeling something fishy about that. Then we can actually compare with other specialty chemical companies, the superstars like Deepak Nitrate, Tata Chemicals, alkyl amines, and so it has a PE value of 48, but when you compare with other industries, it's low. Only Deepak Nitrate has less PE value, around 34.29. So Deepak Nitrate is one of the superstar in chemical industry, especially specialty chemical industry. So it is available at lesser PE value when compared with Himadri. And look at the profits also very less for this quarter when you compare with the other, and it has negative profits of minus 67.74%. So that's an issue. And look at the debt. Vinati Organics has only debt of 2 crores. Navin Flu International have debt of only 2 crores. Other firms have actually more debt. Deepak Nitrate also have. Still, when you compare with the Himadri, it has debt of only 589 crores only. And Tata Chemicals, look at the debt. It has huge debt. And look at the net profit of Tata Chemicals also. It's also affected 96.5%. So right now the company has gone to a highest level of 187.2 rupees in 2018, which was one of the highest. From there, the share price has actually slowed down to 2020 around 70. So from there onwards, because of COVID pandemic and another issues, it went as low as 40 or 37 rupees. So from that 37 rupees, the share price has been was stabilizing, and it was going up, and right now the current market price is at 54.5. Still, I am thinking there is a lot of potential in Himadri potential. This is undervalued stock, and it is a mid-range performer, and there is a turnaround around possibilities there. So from my insight, it has a high PE value, but still okay, and very low. It's not very low. Fair price to book value at 1.27. So I think that it has an opportunity for turnaround possibility. It is a good company and a competent management, but there is, as I discussed before, there is something fishy about who is the promoter, stake, and everything. But apart from it, the company seems running very competent because of their integration and their thrust for innovation. So they're highly innovative company also, and they have a huge prospectus to grow in new areas, especially advanced carbon materials and so on, and huge export potential as well. So investors who can take risk and anticipate turnaround possibilities, they can surely invest into this chemical company. But the main risk is current slowdown and low capacity utilization and projects getting stuck due to these factors. Alright guys, the disclaimer, I'm not appropriately licensed portfolio managers. I thank you everyone. Take your own decision for investing. and give me any comments related to my videos. Thank you once again.